Hi, I'm Dustin Lemick, founder and CEO of BriteCo. Here's something that might surprise you. According to BriteCo's latest survey, roughly 60% of homeowners with jewelry are underinsured. That means the majority of people don't actually have enough coverage to fully protect what they own. And the reason comes down to one big misconception about how jewelry is actually covered. So today, I'm breaking down why this happens, what most people get wrong, and how to make sure you're actually protected. Let's start with that number, 60%. That means the majority of homeowners with jewelry don't have enough coverage to fully cover what they own. And the reason is pretty simple. Most people assume their homeowner's policy automatically covers their jewelry. But what they don't realize is those policies usually have strict limits. So even if you think you're covered, there's a good chance you're not covered for the full value. Here's where the confusion really comes in. A typical homeowner's policy might cover jewelry, but often only up to a few $1,000s. And that's not per item, that's total. So if you have an engagement ring, a watch, and a few other pieces, you can hit that limit pretty quickly. And in many cases, coverage for things like loss or mysterious disappearance is quite limited or not included at all. So the protection people think they have doesn't always match the reality. So why does this happen so often? It's not that people don't care, it's that they don't realize that there's a gap. Jewelry values change over time. Appraisals get outdated, and most homeowners' policies aren't designed specifically for high-value items. So unless you've reviewed your coverage recently, there's a good chance it doesn't reflect what your jewelry is actually worth today. Here's where it really matters. If your jewelry is lost, stolen, or damaged, your policy is only going to pay up to its limit. So for example, if you have a $10,000 ring and your policy only covers $2,500, you're covering the rest out of pocket. That's the reality for a lot of people, and it's why that 60% number is such a big deal. Because most people don't realize the gap until they actually have a claim. The good news is this is all fixable. First, understand what your current policy actually covers. Don't assume, look at the details. Second, make sure your jewelry is insured for its full value. That usually means having a separate policy designed specifically for jewelry. And third, keep your values updated over time, because coverage should reflect what your jewelry is worth today, not what it was worth years ago. That's exactly why we built BriteCo. We created a policy specifically for jewelry and watches, so you're covered for the full value with protection for things like loss, theft, damage, and even mysterious disappearance. And the process is simple. You can get a quote in about 60 seconds. So here's the takeaway. If you own valuable jewelry, there's a good chance you're underinsured and you may not even know it. Take a few minutes to review your coverage and make sure it actually matches what you own. If you want to learn more or check your price, head over to BriteCo. And I'm curious, did that 60% stat surprise you? Let me know in the comments.